Good morning, good afternoon, everyone. Happy to be here presenting Consolidated Uranium. My name is Philip Williams. I'm the CEO and chairman. We're a uranium company. We've been consolidating projects around the world. We now have projects in 4 different countries: Canada, Australia, Argentina, and United States. The United States is really where our focus is. We have some near-term production assets that we're moving towards production. Usual disclaimers. So just stepping back, this is a relatively new company in the uranium space. I think a number of the names that you'll hear from have been around for a long time, doing the same thing with the same projects. We're new. We started about 2.5 years ago. And really, it was around these 3 sort of tenets: the right strategy. And many of us have been in the uranium space for a long time, and it's been a bear market since Fukushima, of course. But we were convinced 2 years ago that that was going to change. We're seeing that change. And we recognized that from the previous cycle, there was an opportunity to create value through consolidating assets, particularly projects that had seen a lot of work in the past, but were sitting on the sidelines, either had been dropped or were in the backs of portfolios that people weren't doing any work on. And now with these projects that we have, we're still focused on acquisitions, but we're now working on our projects. And you'll see when I get to the US projects, we're drilling them right now. We're moving them towards production. We also have the right team. So when I joined it in March of 2020, it was originally a gold company. It was founded by the guys behind NextGen and Mega Uranium. They've stuck around, and additionally, we've added a significant amount of experience to the management and board, both in uranium and in M&A and in finance. And then the right assets. And really, one of the specific tenets of the company was to provide a diversified portfolio. And what we'd seen since we've been in the space, and I've been in uranium since 2006, was single asset, single jurisdiction uranium companies are inherently risky. We've seen geopolitical events turn against companies, turn against projects. And so we wanted to diversify the portfolio and provide investors with insulation from that. And we also wanted to be advanced. And so an acquisition that we did last year from Energy Fuels, we acquired these projects in the US, which are advanced. They're past producing mines ready to go back in production. And we're well funded. So we have about $20 million in the bank right now. So a quick look at our capital structure. We're about a $140 million market cap company. Share price has performed relatively well since we started the company. We have $20 million in the bank. As I said, we've raised about $50 million over the last 2.5 years, from institutional investors all over the world. Our biggest shareholder, as you can see, is Energy Fuels. They picked up that position from the transaction that we did to buy those assets, which will be the focus of the presentation. In terms of the team, I've been in uranium, as I said, since 2006, largely the financial side. I was a sell-side research analyst like Dave Talbot. I was an investment banker. I was a fund manager. And since 2017, I've been an entrepreneur. I started a company called Uranium Royalty Corporation with some partners. That's a public company now, and then came here 2 years ago. We have a lot of experience in uranium, of course. What we've been doing lately in terms of adding experience, particularly on the technical side, I just highlight Marty Tunney. He came in last year as the president and COO. He's a mining engineer. He has experience permitting and building mines in the Americas. And then as part of the transaction with Energy Fuels, Mark Chalmers came on the board of directors. Mark's the CEO of Energy Fuels. He's a 40-year mining engineer, has worked and operated uranium mines around the world. And I mentioned NextGen and Mega. Richard and Lee continue to be advisors to the company. Won't spend a lot of time talking about uranium itself. Obviously, we think the bull market has started. We think the setup is the best it's been in of course, a decade. And we can see prices going significantly higher from here. We do show vanadium. We have vanadium in a number of our projects. It is a metal that comes along with uranium. And we think the outlook for vanadium is quite strong, particularly on the battery front. And investors really get that for free on top of the uranium exposure that we have. So we talked about the consolidation strategy. I thought it would be good to illustrate how well this worked in the past bull market. So if people aren't familiar, price of uranium peaked in 2007, and leading up to that, in this period from January 2005, if you look at the top chart here, to the end of 2006, a number of companies employed this consolidation strategy, including Mega Uranium. They deployed it very successfully, and you can see along that chart they made 9 acquisitions. They raised $50 million. Over that period of time, of course, uranium price went from $20 to mid-60s on its way to 137. Market cap of Mega went from $15 million to $940 million. Share price increased 3,400%. There are tremendous gains to be made in the uranium space if the price moves where we think it's going to. That was our business plan when we started the company. We looked at that and we said, let's emulate that. And now 2 years later, you can see what we've done. Very similar trajectory in terms of the number of acquisitions. In fact, we've now moved ahead in terms of the number of projects we acquired. We've raised similar amount of money. Our share price has increased 1,500%. Our market cap's gone from 2 million to 140. Uranium price has gone from 27 to about $50. Oh, sorry. To about $50. And you can see what we want to show in this slide is that there's tremendous runway for these equity valuations to run, particularly if uranium price continues to move. And because what you have is a very small sector of companies, not much market cap, and if money starts to flood into the sector because the price is moving, it can really generate substantial returns in the equities. And that's not just for us, that's for all the companies in the space. So we'll talk about portfolio. We mentioned that we're in those 4 countries, Australia, Canada, Argentina, the US. We have a critical mass of uranium and vanadium, over 100 million pounds of uranium and almost 100 million pounds of vanadium. Not going to spend much time talking about all of the projects in the light green labels. It's the dark green labels on the left there in the US that we'll spend the rest of the presentation talking about. So this is a zoom in of Utah and Colorado. These are the projects that we acquired from Energy Fuels. And if you can take anything away from this project portfolio, it's this slide. These are historic mines in a prolific district. This part of the world has produced millions of pounds of uranium. Particularly these projects on the left-hand side, the Rim mine, the Tony M mine, the Daneros mine. These were past-producing mines in the bull market, and a tremendous amount of capital has been spent building these mines. They're built, they're ready to be turned back on. We don't have a lot of additional capital to turn them back into production. There are historic resources in place in these projects, and we're drilling. We see quite a bit of exploration upside, and we're drilling them right now. Also importantly, the permits are in place, and so when these mines were turned off in 2008, 2009, 2013, all of the permits were kept in good standing by Energy Fuels, which means that the timeline to bring them back in production is not only short because they're built and we don't have a lot of capital that we need to put into them, but they're fully permitted so we can turn them on relatively quickly. To permit a mine in the US right now would be a 3 to 5 year exercise and cost $1 million. What we're doing here is we're drilling them, we're getting these projects production decision ready. And the other reason that we can produce these projects very quickly is we have a toll milling agreement with Energy Fuels at the White Mesa mill. So this is the mill here, and the transaction with Energy Fuels where they took 18% of our company and we paid them some cash to acquire these assets was not simply a sell the assets and walk away. It was really a partnership, and it's a sort of 3-headed strategic alliance. The first head of that alliance is the toll milling agreement. Energy Fuels is White Mesa Mill, which you can see in the picture there, is the only permitted operable mill in the US. And so you can mine ore, but you need to, in order to turn it into uranium, you need to take it to a mill and process it. This is the only mill that's operating today. And we're the only company other than Energy Fuels that has guaranteed access to this mill through that toll milling agreement. We also have an investor rights agreement with them, which governs their equity interest in the company. It got them the seat on the board. They have rights to participate in future equity financings, and then there's some resale restrictions on those shares as well. The third part of the alliance is this operating agreement. And really what this is the Energy Fuels team operates these projects on our behalf. And what that means is we get access to their full technical team. So we've built up our owners team on the left-hand side. Under Marty, we have a couple of geologists and a permitting guy. But on top of that, we get full access to the Energy Fuels team. You can see on the right-hand side of the page. And this is extremely important to move these projects ahead. These are the people that mined these projects in the past. We get to second them to the projects. They work for us as we need them. We don't have to hire them full-time, which is great for a small company like ourselves. I'm going to go through the projects very quickly. Tony M is really the flagship project of the 3 mines that we referred to on the previous page. It has the largest historical resource at just over 10 million pounds, almost 11 million pounds of uranium. We just completed an 8-hole drill program there, and we'll be putting out an updated 43-101 compliant resource on that project in the next several weeks. One interesting thing that's come out of this, the work that we've done, historically they didn't assay for vanadium. We've assayed for vanadium, and it's actually shown up in decent quantities, and so it's something we'll be looking at going forward is putting a vanadium resource on this project as well as a uranium resource. The second project is the Daneros mine. This was the most recent mine in production and would probably be the first one that we turn back on. This is a much smaller mine relative to the Tony M. It does have a historic resource of a couple of 100,000 pounds. What's exciting about Daneros is it's very high grade on a global scale outside of the Athabasca Basin at 0.36%, ranks as one of the higher grade deposits. Again, because it was the most recently mined, we think it should be relatively easy to get back into. We're taking drills there, I think, in a couple of weeks to complete a drill program on that project. And the third project is the Rim Mine. We just finished drilling a drill program here, and we'll have results out from that shortly. What's exciting about the Rim Mine, and it doesn't show up on this slide for some reason, but there is a historic resource. It includes uranium at a very decent grade of 0.2%, but also has very, very high grade vanadium at a ratio of 9:1. That ranks, that would be among the highest ratio that you get in this part of the world. And at the resource grade of 1.8%, vanadium would make it one of the highest grade vanadium projects in the world on its own. So we think it could be extremely economic, particularly if vanadium has another run like we've seen it have recently. Talk about the permitting. A lot of check marks on the page, but this is just to show that we have all the permits in place to move these projects ahead. Again, it's a 3 to 5 year exercise if you needed to get the main permits, which is the BLM plan of operations and the Dogum mine permit. We're ready to go, and so within a matter of months, we could activate these permits and begin mining all of these projects. Talk about the U.S. uranium market. Many of you may be familiar with the dynamic that's happening down there. The U.S. is the number one, has the biggest reactor fleet in the world, but has very small domestic uranium production. And that's a situation that the U.S. wants to change. And there's a number of different catalysts. I won't go through them right now, but things that are happening in the country to try to inspire domestic production. And we could be the beneficiaries of a lot of these programs, including recently the government went out and is trying to buy, they're building a strategic reserve, and they went out for RFPs to buy 1 million pounds of domestically produced uranium. And they're only going to do more of that, is our understanding. But how does it translate into valuation for companies that are in the U.S.? They tend to trade at a premium valuation. So if you look at this table here, on the left-hand side in the gray, we're highlighting the bona fide uranium producers. So it's UR Energy, Energy Fuels, and UEC. These are companies with licensed production. They were in production in the past. They trade at a premium valuation relative to the peers. The rest of those companies are like ourselves, developing projects in the U.S. We think, we're trading at a discount, of course, to the bigger names. We're still trading at a discount to some of the smaller names. We think that's going to change, particularly as we can show the market that we are a U.S. near-term producer. And hopefully I made the case when you look at our assets that we genuinely have the projects that can move back into production very quickly. We have a whole portfolio of other projects, both and in other categories, so potential development and exploration projects. Earlier in the year, we spun off one of our projects into a company called Labrador Uranium. And as we look at the rest of the portfolio, we're certainly going to do work on some of these projects ourselves, but we're also looking at opportunities to spin out some of these projects into new vehicles, particularly where we can make a sort of additive combination of our asset with some other people's assets, like we did with Labrador. In terms of catalysts, so we checkmark a few things that we've already done, including the work programs underway in the US, and we have a work program right now underway in Argentina. There will be results out from those programs in the next few weeks. We're also going to start doing some work in Australia early next year. And I can't say too much on the final point, but if you look at history of what we've done as a company in terms of how busy we've been, we're going to continue to be busy. There is a consolidation happening in the uranium space. We've seen UEC buy UEX. We've seen Encore do a number of deals. More deals are coming in the space, and we think we're going to be in the center of that activity. So in summary, it's an attractive portfolio of uranium projects. We're in top-tier jurisdictions. We have high grades on a global scale, significant past expenditures across all of our projects, and near-term production potential in that important U.S. market. We're actively evaluating new opportunities, as I just highlighted. We have a compelling valuation. We're well-funded with over $20 million in the bank, and a proven track record of the team, both of what we've done before we joined the company, but what we've done in the last 2 years building out this portfolio.